Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Thanks so much for coming on today.
Happy to be here.
Well, as we just heard last Friday, stocks on Wall Street sharply lower as inflation came in higher than expected, a 40-year high, in fact. CPI, that's excluding food and energy prices, was at 6%. The Dow and the S&P off by close to 3%, the Nasdaq 3.5%. What's the story in the global markets as we start a new week?
Okay, well, as you said, we should start with the U.S. inflation. It rose by 8.6% over 12 months. That's the highest since December 1981, and it's risen from where it was in April, which was 8.3%. But in these times of quickly changing prices, we have to look at the monthly change, not the 12 months change. And the monthly change for May was 1.0%. And this is very alarming because April's monthly increase was only 0.3%. So while a lot of analysts believe that inflation had peaked, the numbers which came in actually show that, if nothing else, inflation may be accelerating, and the inflation numbers came in higher than expected. The expectation was around 8.3%. The increase was broad-based, with shelter, gasoline, and food being the highest contributions. Core inflation, as you stated, over 12 months was 6%. This was, again, this was somewhat slower than it was in April, but monthly inflation remained fairly steady. It was 0.6% in both April and May. So the increasing core inflation seemed to indicate that inflation is now becoming more wider based than just grain and oil. Now, the analysts in the U.S. stock market, on one day, they seem to be worrying about inflation. The other day, they seem to be worrying about recession. But if you look at the numbers in the real economy, the spending and labor numbers in the U.S. so far seems to be very strong. And personal consumption expenditure for April, which is the latest number we have, rose by 1.4% in nominal terms, 0.5% in inflation-adjusted terms. May's job creation was 330,000 jobs. Labor force participation rate was 62.3%, which represents a healthy growth, but it is slower than April, and the labor force participation rate is still below where it was pre-pandemic. Wage growth was 0.3% in May and 5.2% over the 12-month period, which is relatively high, but it is also considerably behind the inflation figures. So again, one day the market seems to be worrying about overheating and having more inflation. On the other day, they seem to be worrying about higher recession, the possibility of recession. But because the inflation numbers came in so high, the survey seems to indicate that there's now 40% chance of a giant step when the Fed meets this week. Giant step in this case means 0.75 percentage point increase in interest rates. And more analysts are now arguing that U.S. will have a recession in either the fourth quarter this year or first quarter next year. Friday, Dow went down by 2.7%, S&P by 2.9%, Nasdaq by 3.5%. And for the week, Dow fell by 4.6%, S&P by 5.1%. Nasdaq by 5.6%. Year to date, Dow fell by 14.2%, S&P by 18.7%, and Nasdaq by 28.4%. For European stocks, well, Eurozone had 8.1% inflation in May over the last 12 months. That's up from 7.4% in April. Eurozone have been running behind U.S. in terms of inflation, but now they've effectively caught up with the U.S. inflation rates. Because of that, European Central Bank has stated that they will shut down net purchases of government debt in June and raise rates in July. But there is some qualitative difference between inflation in U.S. and EU. In U.S., part of the inflation is supply-driven, rise in costs of grain and oil like every other country. But U.S. is experiencing inflation further because they have very strong demand. Eurozone their demand is not as strong, but they're hit much more directly by the Russian invasion into the Ukraine. So their inflation seems to be much more supply factor driven. On Friday, FTSE, CAC, and DAX. Today, Friday, FTSE, CAC, and DAX all fell. And in Asian front, the China inflation actually came in lower than expectations. It was 2.1% over the last 12 months, where the analysts were expecting 2.2%. So China and Japan are probably the only two major economies which are expected to have expansionary policies this year. On Friday, Nikkei was down 1.5%, Shanghai was up 1.4%, and Hang Seng was down 1.25%. But today, all the major Asian indices are down. Today, Nikkei was down 3.0%. Shanghai and Hang Seng are still trading, but Shanghai is down about 0.9%, and Hang Seng is down by about 3.3%.
Well, Korean stocks today also off by quite a bit. All the large cap stocks down anywhere from 2 to 5%. Samsung Electronics at its lowest since sometime in 2020. And the exchange rate is shot right back up again to where it was about a month ago. Tell us about the domestic market, Professor.
Okay, well, the domestic market was pulled down by the U.S. inflation figures and the what's happening in the New York stock indices. But also, we had a series of bad news last week. So Kospi was down all week yesterday. For Korea, the OECD during last week revised Korean growth projection downwards to 2.7%. This is in line with Bank of Korea, government, and KDI projections for this year. But perhaps more worryingly, next year's growth projections were revised downwards as well. Both World Bank and OECD have revised their world growth projections downward, so the concern now is that the Korea's growth heavily depends on exports, but if the growth rate for the world is reduced, that means exports will be reduced as well, and that will have big consequences for Korean growth in the near future. Now, Kospi during the last week fell by 2.8%, and today it fell by additional 3.5%, and it ended today at 2,504.51 individuals bought, institutions and foreigners sold. Year to date, Kospi is down 16.2%. Nasdaq last week it was down on Tuesday, up on Wednesday and Thursday, and down on Friday, but on the net it fell down for the week. Last week, Nasdaq fell by 2.4%. Today, it was down additional 4.72%. It ended today at 828.77. Individuals and foreigners bought, institutions sold. Year to date, Nasdaq is down 20.1%.
Well, Professor, we'll have to leave it there for today and catch up later this week after the Fed meeting. Professor, thanks so much for sharing your insights with us. We always appreciate it.
Thank you.